Okay, let's unpack this. Imagine a company, right, sells everything from a shampoo you grab at the drugstore to a really high-tech luxury serum, and all while making its own, like, groundbreaking science globally accessible. Today, we're diving deep into L'Oréal S.A, the undisputed global leader in the beauty industry. This isn't just about makeup and skincare, it's about a fascinating, almost surprisingly resilient business model that has truly stood the test of time.
It really is fascinating. And what's particularly interesting here is how L'Oreal has actually built this empire on what they call their multipolar business model. It's more than just, diversification. It's a whole strategic architecture. Imagine having multiple sort of independent growth engines spread across different continents, different product types, even different price points. And this structure, it acts like a remarkably effective shield against, say, localized economic problems or just fleeting trends. So if one engine, maybe luxury beauty in a specific region, starts to sputter because of economic headwinds, another one, maybe dermatological beauty in a really fast expanding market, can surge forward. That ensures the whole group stays stable, keeps momentum. We're looking at a financial profile that genuinely screams strength, consistent growth, incredibly high profitability, and serious, reliable cash flow.
You've painted this picture of an almost invincible giant. But I'm curious, are there any specific Achilles heels in this diversified portfolio? Because what I find truly captivating, and maybe the biggest challenge for L'Oreal, is this central tension. How do they navigate a significant slowdown in a critical market, one that was booming, like
Right.
China, while still supercharging growth in these exciting new areas like dermatological beauty and those rapidly expanding emerging markets? That's really our mission for this deep dive, to understand how they plan to pull this off and, if they can truly keep that bulletproof reputation. It's exactly. And their market leadership is backed by a formidable competitive moat, just unparalleled R&D scale, a really strategic, diverse brand portfolio, and this unique universalization strategy we absolutely need to get into. All that positions them exceptionally well. However, to your point, the deceleration in North Asia, especially how it impacts their high-margin L'Oréal Luxe division, that is the most significant near-term risk, no question. And for any investor, or really for anyone just watching this tighten, the central question is, can that premium valuation they have be sustained, especially in a growth environment that's, well, normalizing? So we'll delve into the broader industry dynamics, L'Oreal's unique competitive advantages, their specific business performance, financial health, and of course the big challenges and opportunities ahead.
So let's really set the stage here. How enormous is this beauty world that L'Oreal so powerfully dominates? Can you give us a sense of the scale? Oh, it's absolutely enormous. And what's remarkable is its historical resilience. Think about economic downturns, global pandemics. Beauty often holds up surprisingly well compared to other sectors. Market estimates for 2024, well, they vary a bit depending on how broadly you define beauty. Some estimates range from, say, $425 billion up to a staggering $646 billion globally.
Wow.
Yeah. L'Oreal's own internal analysis, which tends to be maybe a bit more focused on their core categories and uses a more consistent definition year to year, puts the estimated market value at over $290 billion.
Okay.
To put that in perspective, that's larger than the entire GDP of many, small countries. And after that post-pandemic boom where we saw beauty sales really surge
Yeah.
as consumers maybe treated themselves, growth is now kind of normalizing,
Yeah.
settling into a sustainable but still, pretty robust trajectory. L'Oreal itself noted a healthy plus 4.5% growth rate for the market overall in 2024, and forecasts are projecting a compound annual growth rate, or KGR, of anywhere from 5% to 7% through 2030. What this implies, really, is that despite its massive size, this market is far from saturated. It has these persistent underlying growth drivers that just keep it expanding.
That's undeniably strong growth for what feels like a pretty mature industry. But what's genuinely fueling it? Is it just more people buying more lipstick, or are there deeper shifts happening?
Oh, it's definitely deeper shifts. There are several powerful secular trends at play here, really pushing this market forward with incredible momentum. First, there's this rising global emphasis on self-care and wellness. It's a big one. People are increasingly seeing beauty not just as vanity, but as like an integral part of their overall well-being. They're investing more in themselves, and beauty products are often a natural, accessible way to do that. And this isn't a fleeting trend. It feels like a durable tailwind that will continue to drive demand for years. Connected to that, demand for anti-aging and, maybe more accurately, age management products remains incredibly strong. As populations globally age, there's this persistent desire to maintain a youthful appearance or perhaps embrace healthy aging. It's a category that seems to defy economic cycles.
Right.
But crucially, and this is a massive demographic shift, the expansion of the global middle class, especially in emerging markets, is set to add an estimated 750 million new potential consumers by 2030.
750 million.
Yeah. That's essentially adding almost 2 new United States worth of people to the total addressable market. Millions being introduced to beauty products for the first time or maybe moving into higher tier products as their disposable income grows. And crucially, if you're looking for the bedrock of this market, skincare remains the undisputed king. It accounts for about 39% of the total market value.
Skincare.
Yeah, it's foundational. It's seen as an essential, almost, rather than just a discretionary purchase for many people.
So beyond just growth in numbers, what are the big, transformative shifts happening in how people actually buy, discover, and maybe even think about beauty? Because it feels like the landscape is constantly morphing.
It truly is, and this prompts us to consider how adaptable are companies, even giants like L'Oréal, to these really transformative trends? Because we're seeing massive shifts that are reshaping the entire industry landscape, not just incrementally, but fundamentally. First, there's the undeniable and frankly accelerating shift to online. E-commerce penetration, it's projected to reach nearly 1/3 of global beauty sales by 2030. That's up from 26% in 2024. It's making it the largest single channel.
A third online. That's huge.
Huge, but it's also evolving beyond just traditional websites. We're now talking social commerce.
Yeah.
Think TikTok, think Instagram. They're not just places for discovery anymore. They're integral to the actual product purchase. Imagine a L'Oreal-backed influencer on Instagram doing a live try-on, right? And with a single tap, you can buy the product directly within the app without leaving.
Right there, yeah.
Exactly. And the data suggests a staggering 68% of purchases on these platforms are actually impulse-driven.
Wow, 68%.
Yeah. That really highlights the immense power of influencer marketing and these algorithm-driven trends to convert browsing into buying almost instantly. What this really means for you as a consumer is that beauty is now less about, say, the planned trip to the department store counter, and more about that instant gratification of a scroll, tap, and buy experience, often catalyzed by whatever you see trending in your social media feed.
Okay, so digital is huge. What else?
Next, sustainability and clean beauty. This is massive. What was once a niche concern, maybe a nice-to-have for a select group, is now really a baseline consumer expectation. It's becoming non-negotiable for many. More than 65% of consumers actively seek out environmentally friendly brands, and a significant 55% say they're willing to pay more for sustainable products.
That's a big shift. Willing to pay more.
It is. And this isn't just a buzzword. It's fueling real demand for products marketed as clean, natural, organic. These kinds of formulations are forecast to grow at an even faster rate, something like 6.88% CAGR. And this impacts everything. From ingredient sourcing, L'Oréal talks a lot about green sciences, where they're pioneering ways to create high-performance, sustainable beauty formulations derived from nature, often using advanced biotech.
Green sciences, okay.
Yeah, all the way through to packaging innovations, like refillable options, recyclable materials. It's a holistic shift that demands genuine commitment from brands. Then there's hyper-personalization and technology. AI and augmented reality, AR, are rapidly making personalization a core consumer expectation. Research shows 71% of consumers now expect personalized experiences when they shop, whether it's online or in a physical store.
71% expect it now.
Exactly. And this is driving huge innovation. You see virtual try-on apps incredibly popular. They help reduce returns too. You see AI-powered skin diagnostics that can analyze your skin's unique needs, maybe down to a microscopic level. And even customized product formulations tailored specifically for you.
Like mixing a foundation shade just for me.
Potentially, yeah. Or even formulating a serum based on an AI analysis of your skin concerns. My friend actually used one of those AI skin diagnostic apps recently. It recommended a serum she'd never even heard of, based on her specific needs. She said it felt incredibly personal, almost like having a dermatologist in your pocket. It's truly transforming the consumer journey, moving away from that old one-size-fits-all approach to something deeply individual.
That leads nicely into the next point, I think, this healthification.
Yes, absolutely. The healthification of beauty. This is another really significant undercurrent, and it fundamentally expands the definition of the beauty market. It's this powerful convergence of beauty with health and wellness. So this means the beauty market now includes categories like non-invasive aesthetic treatments, beauty supplements you might ingest for skin or hair health, and really advanced sun care that goes way beyond simple SPF protection. The rapid growth of the dermocosmetics category is the prime example here. These are the products recommended by healthcare professionals, rooted in scientific efficacy, often found in pharmacies or specialty medical stores.
And L'Oreal's been big in this space for a while.
They have. What's truly insightful here is L'Oréal's strategic foresight. They saw this healthification trend coming years ago and invested heavily, particularly with acquisitions like La Roche-Posay and CeraVe. This shift means traditional beauty companies are competing not just with each other anymore, but also with wellness brands, supplement companies, even quasi-pharmaceutical players. It requires a deep, scientifically validated approach. They haven't just entered a new category. You could argue they've helped redefine the very boundaries of the beauty industry itself. It's a very dynamic space.
Okay, one more big trend.
Yes, finally, industry consolidation. This relentless pace of change, the emergence of these new high-growth segments. It means the M&A landscape remains very, very active. Large strategic players like L'Oréal are constantly acquiring innovative high-growth brands, either to fill portfolio gaps, enter new categories quickly, or just capture emerging trends before they get too big. And private equity is showing significant interest in the sector too, often looking for those agile, digitally native brands that have cracked the code online. Acquisition targets are often brands aligned with these very trends we've been discussing, especially those in dermocosmetics, clean beauty, and wellness. It's a sign of a vibrant, evolving market where companies are constantly seeking to strengthen their position and adapt. Hashtag L'Oréal's unmatched market leadership and competitive moat.
So against this incredibly dynamic, rapidly evolving backdrop, L'Oréal stands out as the clear leader. Just how big are they really compared to the competition? Is it like a slight lead, or are they genuinely operating on a different playing field?
Oh, they're genuinely operating on a different playing field. Their scale is truly unmatched, and it's a critical component of their enduring market leadership. In 2024, L'Oréal reported beauty sales of 44.5 billion.
44.5 billion euros?
Yeah. To put that in perspective, their closest rivals were Unilever at 26.2 billion, Estee Lauder at 15.2 billion, and Procter & Gamble at 15.0 billion in their beauty segments.
Okay, so a huge gap.
A huge gap. You can see L'Oréal isn't just leading, they've created a significant distance between themselves and the competition. And this isn't just leadership in one segment like luxury or one country. It extends across their entire multipolar model. They hold leading positions across geographies, product categories, and price points. This is a company that isn't just big, it's dominant across the board. They're really setting the pace for the entire industry.
An incredible lead, definitely. But, history is littered with market leaders who eventually stumbled. Is L'Oréal truly unassailable, or are there underlying forces that could maybe erode that competitive edge over the long term, even with their current strengths? What makes them so difficult for anyone else to catch?
That's an absolutely critical question because you're right, no leader is truly unassailable without a formidable defense. And L'Oréal has built a truly formidable and multifaceted competitive moat. It's sustained by several key advantages that are just very, very hard for competitors to replicate. For you listening, these are the fundamental reasons L'Oréal isn't just a market leader, but one that has sustained that leadership for decades, year after year. At the core, you have their unmatched scale and R&D supremacy. Their sheer size enables an unparalleled level of investment in research and innovation that smaller players simply cannot match. In 2023, their R&D budget exceeded 1.3 billion.
Billion with a B.
With a B. That funds a global network of over 4,000 researchers who file literally hundreds of patents annually. This investment dwarfs smaller competitors. It creates a continuous pipeline of innovation and allows L'Oréal to lead in high-potential, sometimes speculative fields like green sciences, which we mentioned, for sustainable formulations and advanced beauty tech. It becomes a virtuous cycle, right? Pioneering innovation leads to market share gains, which in turn funds even more R&D, continually widening their lead. Imagine they're not just creating cosmetics, but they're kind of future-proofing their dominance or effectively shaping the market rather than just reacting to it.
Okay, scale and R&D. What else?
Then there's their diversified and strategic brand portfolio. L'Oréal manages this sprawling portfolio of over 36 diverse, yet complementary, international brands. They're meticulously organized into 4 distinct divisions, which we'll get into. This architecture allows them to cater to basically every consumer segment and price point imaginable. Think mass market brands like L'Oréal Paris, Garnier, Maybelline, the ones you find in a drugstore. Then professional salon brands like Kerastase and Redken that hairdressers swear by. Luxury icons like Lancôme, Yves Saint Laurent, Giorgio Armani, Prada, gracing high-end boutiques, and those science-backed dermatological brands like La Roche-Posay, CeraVe, SkinCeuticals found in pharmacies. This vast diversification is a primary source of their financial resilience. It ensures that weakness in one segment or maybe one region can be comfortably offset by strength in another. It's truly like having many different powerful engines. So if one sputters due to a local issue or a trend fades, others can still powerfully propel the whole company forward.
This universalization strategy, it's mentioned as arguably their most powerful competitive advantage. What exactly does that mean in practice? Why is it so hard for competitors to copy?
Yeah, that's a great question. And it's where L'Oréal's strategic genius truly shines. Universalization, their definition is globalization that captures, understands, and respects differences.
Mm.
So it's not about making one global product and just selling it everywhere unchanged. It's about leveraging their global scale to address local needs effectively. Operationally, they achieve this through a really unique global network of R&I research and innovation and marketing hubs. They're located in strategic markets like China, India, Brazil, Japan.
So local labs.
Yep. Exactly.
Yeah.
These local hubs are empowered to conduct really in-depth consumer research. They analyze everything from skin types and hair textures prevalent in a region to climate conditions, cultural beauty rituals, even specific air pollution challenges people face. And then they develop products specifically tailored to those local needs. For example, creating community-resistant hair care specifically for Southeast Asian markets where frizz is a major concern, or developing skincare formulas suitable for the specific air pollution challenges in a city like, say, Shanghai.
Okay, that makes sense.
And what's absolutely fascinating here is the flywheel effect this creates. A successful product developed for, let's say, the India market can then be adapted, tweaked, and scaled for launch in Latin America or Africa, leveraging that initial R&D investment across multiple regions. Now think about it. A purely U.S.-centric company. They lack the institutional infrastructure, the deep cultural understanding to develop a winning product specifically for the Brazilian mass market, for instance. And conversely, a local champion brand in India. They lack the global distribution network to scale their success worldwide. L'Oréal's structure allows it to do both simultaneously. It creates this competitive advantage that companies with more centralized R&D models just cannot easily replicate. It's a brilliant blend of global scale and hyperlocal relevance.
Wow, okay, that's powerful.
It really is. And finally, underpinning all this is their global distribution and supply chain excellence. They have an extensive worldwide network. 36 manufacturing plants, 158 fulfillment centers. That provides significant economies of scale in production, procurement, logistics. This integrated industrial footprint ensures consistent high-quality standards across all their products. And crucially, it provides the agility to bring innovations from their global R&D centers to market quickly and efficiently, reaching consumers all over the world. What this means for you, the consumer, is that L'Oréal products, whether it's a brand new luxury serum or your favorite everyday Garnier shampoo, are available where and when you want them reliably.
You've laid out L'Oreal's formidable moat, but the beauty industry is kind of notorious for disruption, right? My mind immediately goes to those nimble, direct-to-consumer DTC brands and those influencer-led brands that seem to pop up overnight and just capture huge segments of the market. How does a giant like L'Oreal genuinely defend against that kind of agile innovation? Or do they even need to worry?
That's a very relevant challenge, and it's something many large, established corporations really struggle with. But L'Oréal counters it with a dual-pronged strategy that's proven remarkably effective. First, they systematically acquire successful and disruptive independent brands. They use M&A to fill portfolio gaps and capture emerging trends quickly. We've seen this time and again with acquisitions like NYX Professional Makeup, IT Cosmetics, Youth to the People brands that started small, agile, often with a real cult following online.
So they buy the disruptors.
They buy the disruptors. But they don't just buy them, they integrate them, providing L'Oréal's immense resources and global reach to really supercharge their growth. Second, they leverage their own massive digital ecosystem. They have extensive partnerships with a curated network of influencers, big and small. And they have industry-leading investments in AI and AR technology to engage directly with consumers. They're effectively mimicking the agility of smaller players, but doing it at a truly global scale. So they can essentially be the agile competitor themselves, but with the resources and reach of a global giant, which is an incredibly powerful combination. They're not just defending, they're actively absorbing and adapting.
So this multipolar model we've heard, it's central to their resilience. How is it actually structured internally? How do these different parts work together to create that overall strength?
Right. L'Oréal's operations are meticulously built around 4 distinct divisions. Each one targets a specific consumer segment and a specific distribution channel. This diversified model is absolutely central to their resilience and their ability to navigate different market conditions, capitalize on varied trends. For you listening, this means L'Oréal touches almost every facet of the beauty market, from your daily essentials right through to those high-end indulgences. The first division, and the largest by revenue, is consumer products. This accounts for 37% of their 2024 sales. This is home to those household names: L'Oréal Paris, Garnier, Maybelline New York. Distributed through mass-market retail channels, think your local drugstores, supermarkets, mass online retailers like Amazon.
The everyday stuff.
Exactly. Their strategy here is what they call democratize and premiumize the best of beauty, meaning they aim to make high-quality, innovative products, often leveraging technology that might trickle down from their luxury or professional divisions, accessible to a broad global audience, but at competitive price points. In 2024, it delivered solid like-for-like growth, LFL growth, of plus 5.4%. This performance was driven by strong momentum in Europe and, crucially, in those rapidly expanding emerging markets. That helped offset softer results they saw in the United States and China in that division. It really highlights the power of that diversification. When one region or segment faces headwinds, others can step up.
Okay, consumer products. Next.
Next is L'Oréal Luxe. This represents a substantial 36% of 2024 sales,
Yeah.
so almost as big as consumer products. This division holds those prestigious, high-margin brands: Lancôme, Yves Saint Laurent, Giorgio Armani, Prada Beauty now too. It's a critical contributor to the group's overall profitability. Now, in 2024, its growth moderated quite a bit to plus 2.7% LFL. This was directly impacted by those challenging market conditions in North Asia we talked about, particularly in travel retail, the duty-free shops, heavily reliant on Chinese tourist spending.
Right, the travel retail hit.
Exactly. However, this headline figure, that plus 2.7%, it masks a remarkable story of geographic rebalancing. Outside of North Asia, the Luxe division actually achieved remarkable double-digit growth. And for the first time ever, it secured the #1 position in the luxury beauty market in North America. That's a significant milestone.
Wow, #1 in North America.
Yeah. And fragrances, with blockbusters like Libre by Yves Saint Laurent and Paradox by Prada, remained a key growth driver within Luxe. It shows the enduring appeal and high loyalty for luxury scents, even when other luxury categories might falter a bit.
Okay, Luxe. And this next one, dermatological beauty, which used to be called active cosmetics. This is where it gets really interesting, right? Given that healthification trend we discussed, it feels like a massive strategic win for them.
Absolutely, you're spot on. This division, now known as dermatological beauty, has been the group's undisputed star performer for several years now. It's about 16% of sales in 2024. It includes those science-backed brands recommended by healthcare professionals: La Roche-Posay, CeraVe, SkinCeuticals, brands often found in pharmacies, specialty medical stores, or recommended directly by dermatologists. Capitalizing perfectly on that healthification of beauty trend, the division grew at an impressive plus 9.8% LFL in 2024. It crossed the $7 billion sales mark for the first time.
Almost 10% growth.
Still, it continues to significantly outpace the dynamic global dermocosmetics market overall, driven by the phenomenal global expansion of brands like La Roche-Posay, known for its sensitive skin solutions, and CeraVe, which has seen just viral success on platforms like TikTok, turning a dermatologist-recommended staple into a genuine global sensation, especially with younger consumers.
Right, CeraVe is everywhere on TikTok.
Exactly. This division is a clear and powerful example of L'Oréal successfully pivoting to a high-growth, high-margin segment that truly leverages their deep scientific R&D strength. It demonstrates exceptional strategic foresight.
Okay, and the last division.
Finally, we have professional products. This makes up about 11% of 2024 sales. This division serves the professional salon industry with iconic brands like Kerastase and Redken. It posted strong LFL growth of plus 5.3% in 2024, consistently outperforming the broader professional market. Growth here was propelled by the continued premiumization of hair care, led by the Kerastase brand, which is known for its high-end salon treatments and, bespoke solutions. They've also seen significant success implementing an omni-channel strategy that seamlessly integrates the salon experience with retail channels, so consumers can discover and purchase professional-grade products both in-salon and through other direct-to-consumer retail avenues, like their websites or specialty retailers. This dual approach helps them reach a wider audience while maintaining that crucial professional credibility.
Okay, so we've looked at the internal mechanics, the divisions. Now let's zoom out to the world map. Where are these engines firing strongest? And critically, where are they meeting resistance? What does this all mean for their global footprint?
Right. L'Oréal's global footprint is indeed exceptionally well diversified, but recent performance clearly highlights a shift in where the growth is actually coming from. And this is vital for understanding their future trajectory. Europe, surprisingly, maybe to some, was actually the largest single contributor to the group's overall growth in 2024. It delivered a strong plus 8.2% LFL increase in sales.
Europe, still growing that fast.
Yeah, a remarkably broad-based performance across all major countries and categories within the continent. It now accounts for 33% of their 2024 sales, showing consistent strength and innovation even in what we think of as a mature market. North America, representing 27% of 2024 sales, also posted solid growth of plus 5.5% LFL. This was driven by successful channel expansion, getting into more stores, growing online, and a strong focus on valorization. That's essentially selling higher value products, encouraging trade-up, particularly strong in the Luxe division, which, despite challenges elsewhere, significantly outperformed the market in North America. This demonstrates their ability to really localize strategies for success.
Okay, Europe and North America, solid. Then North Asia.
Yeah, North Asia. This made up 24% of 2024 sales, and unfortunately, it was the primary source of weakness in 2024. Sales there contracted by -3.2% LFL. The decline was directly attributable to that challenging market in mainland China, which experienced negative growth overall for beauty and those significant disruptions in the travel retail channel, which, as we noted, is heavily reliant on Chinese tourists.
And the reasons for China slowing down?
Well, it seems linked to deeper macroeconomic issues in China. Things like a moribund residential property sector, which impacts wealth perception, associated credit problems, and generally lasting low consumer confidence. Consumers are tightening their belts, especially on discretionary luxury spending. But despite the market decline, L'Oréal's management was quick to emphasize, and this is important, that the company demonstrated resilience by actually gaining market share in China.
Gaining share in a declining market.
Exactly, which is a testament to their brand strength and their execution capabilities, even in extremely tough conditions.
Okay, so North Asia is the weak spot. Where's the offsetting strength coming from?
Right, on the flip side, the SAPMENA, SSA, and Latin America regions. These combined represent about 17% of 2024 sales, and they have unequivocally become critical growth engines. SAPMENA, that stands for South Asia Pacific, Middle East, North Africa, Sub-Saharan Africa, grew an impressive plus 12.3% LFL, while Latin America grew plus 11.0% LFL in 2024. Wow, double-digit growth there. Strong double-digit growth. And it was fueled by a balanced contribution from both volume increases, more people buying, and value mix improvements, people buying more expensive things. This really highlights the success of the company's expansion strategy and its universalization playbook in these regions. For you listening, this points directly to the future growth engines of the company. It shows where L'Oréal is finding success in strategically redirecting its focus and investments. Hashtag financial health and growth engines.
Let's talk about the bedrock of any successful company. Its financials. We've heard a lot about L'Oréal's scale and strategy, but what do the numbers actually reveal about its health and stability?
Yeah, a comprehensive look at L'Oréal's financial statements over the past decade, it reveals a truly superior and remarkably consistent financial profile. This should absolutely give you confidence in their long-term stability and their proven ability to execute these ambitious strategies we've been discussing. First, let's look at revenue growth. The company has consistently grown its top line through a powerful combination of organic growth that's driven by innovation and market share gains and strategic acquisitions. Over the past 10 years, their revenue has grown at approximately a 5.6% compound annual growth rate, CAGR.
Pretty steady.
Very steady, especially for a company this size. They successfully navigated major market disruptions, like the COVID-19 pandemic in 2020, showing a strong, rapid rebound in the subsequent years. They reached $43,487 million in revenue by 2024. This demonstrates incredible resilience and adaptability, even when facing global shocks. They didn't just survive the pandemic years, they really thrived through it.
Okay, revenue growth strong. What about profits?
Right, profitability and margin expansion. L'Oréal exhibits exceptional profitability. It's a testament to its strong brand equity, that immense pricing power we mentioned, and very disciplined cost management. Gross margins have remained consistently high, generally in the 71–74% range. They hit a remarkable 74.2% in 2024.
74% gross margin, that's huge.
It's huge. That's a clear indicator of the perceived value consumers place on their products and their ability to command premium prices across that diverse portfolio. Even more impressively, they've achieved a steady expansion of their operating margin over the decade. It rose from 17.4% in 2015 to a record 20.0% in 2024.
20% operating margin, wow.
Yeah. This shows they're not just growing revenue, they're growing profitably. They're leveraging their massive scale effectively to improve efficiency and drop more of that revenue to the bottom line. They also consistently generate high returns on capital. This is a crucial metric. It tells us they're efficiently using their assets and their shareholder equity to generate profits. Their return on equity, ROE, has typically been in the high teens to low 20s% range. That's a very strong indicator of value creation for shareholders. They're not just deploying capital, they're deploying it wisely and effectively.
Good returns. And the balance sheet, debt levels, cash.
And finally, their balance sheet and cash flow. L'Oréal maintains an exceptionally strong and flexible balance sheet. Financial leverage, debt is managed very prudently. They have a moderate debt-to-equity ratio that provides ample capacity for future investments, strategic acquisitions, and those generous shareholder returns we'll talk about. They're also a highly cash-generative business, which is a key indicator of earnings quality and operational efficiency. In 2024, the company generated net cash flow of 6.6 billion galais. That's an impressive increase of 8.6% year over year. It just underscores their exceptional operational efficiency and robust financial health. They generate a lot of cash.
So with such a strong financial foundation, how do they plan to keep growing? What are their key growth engines for the future, especially as some markets like China face headwinds?
Right. Their growth strategy is multifaceted and incredibly dynamic. It relies on a powerful combination of organic innovation, digital leadership, geographic expansion, and targeted strategic acquisitions. This highlights the diverse, interconnected avenues L'Oréal is pursuing to ensure continued diversified leadership for decades to come. Innovation in the R&D pipeline is always the primary engine of their organic growth. They consistently invest around 3.5% of their sales back into R&D. That's an annual budget exceeding $1 billion now.
Still over $1 billion a year on R&D.
Yeah. And this isn't just about, incremental improvements to existing products. This investment is strategically focused on two key areas for future growth. First, green sciences, which we discussed, focusing on developing high-performance, sustainable, and naturally derived formulations to meet that surging consumer demand for clean beauty, moving beyond just natural to nature-powered science. Second, beauty tech. L'Oréal aims to be a true beauty tech powerhouse, leveraging data, AI, augmented reality to create entirely new personalized services and products. A recent example they showcased was the L'Oréal Cell Bioprint. It's a cutting-edge device for personalized skin analysis unveiled at CES 2025, built on their extensive longevity science research.
So real tech innovation, not just marketing.
That's exactly. This shows their commitment to staying at the absolute cutting edge of scientific and technological innovation in beauty, truly shaping what's next. Their digital transformation and e-commerce strategy is also critical, and frankly, they've been leading here for years. L'Oréal has successfully transformed into a digital-first company, really embracing online channels as central to their business. E-commerce grew to represent 29% of total sales in the first half of 2025. Making it a significant and continuously growing channel for growth.
Almost 30% online now.
Almost 30%. And their strategy is now evolving beyond just traditional e-commerce websites to fully embrace social commerce, where sales are generated directly through social media platforms, and enhancing the consumer experience with those AR-powered virtual try-on tools. This is how they stay incredibly relevant and deeply connected to modern consumers, meeting them precisely where they are online, from discovery right through to purchase.
And the geographic expansion.
As we discussed, expansion in emerging markets is a huge strategic focus, and its importance has only intensified with the North Asia slowdown. The APMENA and Latin America regions, delivering that strong double-digit growth in 2024, are absolutely central to L'Oréal's long-term ambition to acquire the next billion consumers. They're expertly leveraging their universalization strategy there, using those local R&D hubs in places like India and Brazil to develop and market products specifically tailored for these high-potential consumer bases. This is their proven blueprint for capturing future market share and ensuring diversified, resilient growth.
And finally, acquisitions. Still buying brands.
Absolutely. Their acquisition strategy is key. L'Oréal has a long and highly successful track record of growth through strategic acquisitions. targeting brands that either fill a gap in its portfolio or provide immediate entry into a new, high-growth category. This strategy remains a key component of its future growth plans. Recent examples include the 2023 acquisition of A.S.A. That's a luxury brand with really strong ethical and modern credentials. It strengthens the Luxe division with a culturally relevant, fast-growing player.
ASOP, right. Big acquisition.
Big acquisition. Similarly, the acquisitions of Skin Better Science in 2022 and the Korean brand Dr. G in 2024, they bolster that high-growth, high-margin dermatological beauty division, strategically aligning their portfolio with powerful market trends and consumer demand for science-backed solutions. They're constantly looking to enhance their portfolio strategically, ensuring they stay at the forefront of innovation and consumer preferences. Hashtag capital allocation and shareholder returns.
It sounds like they generate just a tremendous amount of capital. That's $6.6 billion in cash flow. How do they meticulously decide where to put it all? What's their philosophy for allocating such significant resources?
Yeah, they generate a lot of cash, and L'Oréal employs a highly disciplined and very balanced capital allocation framework. It's meticulously designed to create sustainable, long-term value for all their stakeholders. Their priorities are very clear and consistently communicated. First, funding organic growth. Second, pursuing value-accretive mergers and acquisitions. And third, consistently returning excess capital to shareholders. It's a well-structured, almost predictable multi-decade approach.
Okay, organic growth first. How does that look?
The primary use of capital is reinvestment back into the core business for organic growth. This is vividly evident in their consistent allocation of roughly 3% of sales back into R&D, which directly sustains that innovation pipeline and future-proofs their competitive edge. Capital expenditures, CapEx, are also strategically directed towards upgrading and expanding their global manufacturing and supply chain network, enhancing efficiency, resilience, technological capabilities. A concrete example is that new smart fulfillment center they inaugurated in Suzhou, China. It's designed specifically to handle the high volumes and complexity of e-commerce distribution in that critical market. It's all about keeping their operational machinery top-notch, highly efficient, and ready for future demand.
And then M&A.
Right. Strategic acquisitions are a core pillar of L'Oréal's growth and capital allocation strategy. It's not just an opportunistic add-on for them. They have a long and incredibly successful history of acquiring and expertly integrating brands across all divisions. And these aren't random purchases, they are strategically targeted, either to enhance the existing brand portfolio, provide immediate entry into new high-growth categories like dermocosmetics, or strengthen their geographic presence in key markets. It's a precise, disciplined strategy to fill gaps, seize emerging opportunities, and accelerate their long-term vision.
Okay, so reinvestment, M&A, then shareholder returns.
Exactly. After robustly funding internal growth and those external M&A opportunities, the company has a strong, consistent commitment to returning excess capital to its shareholders. They do this through a measured combination of dividends and share repurchases. This ensures that the considerable value they create is shared directly with those who invest in the company.
So what does this actually mean for someone who owns L'Oréal shares? Are they a reliable investment for income or mostly for capital appreciation?
Well, L'Oréal has a long and remarkably reliable history of paying and consistently increasing its dividend. They've made payments for at least 26 consecutive years, which puts them in a pretty elite group. For the 2024 fiscal year, they proposed a dividend of 7 pound zeros per share. That represented a solid 6.1% increase over the prior year. The dividend payout ratio, the percentage of earnings they pay out as dividends, has historically been managed in a very sustainable range, around 50–65% of net earnings.
So keeping some cash back.
Exactly. It's a sweet spot. It allows for both a meaningful, growing return to shareholders and sufficient capital retention for ongoing reinvestment back into the business. It's a very steady and reliable approach, appealing to long-term investors looking for dividend growth.
And they also do share buybacks, don't they, as another way to return capital?
Yes, exactly. L'Oréal actively uses share repurchase programs as a flexible tool to return additional capital to shareholders and also optimize their capital structure. A new program authorizing the buyback of up to 500 million in shares was announced recently for the period ending June 30th of 2025. But beyond these, let's call them routine buybacks, they've also used large strategic repurchases to optimize their capital structure and shareholder base. A really notable example was back in 2021. They executed a transaction to repurchase 4% of its own shares from Nestlé for $8.9 billion.
Repurchasing from Nestlé, right. Why was that so significant?
Well, It wasn't just a financial maneuver to boost earnings per share, though it did that too. It served a profound strategic governance purpose. The cancellation of those shares directly increased the ownership stake of the Bettencourt-Meyers founding family from 33.3% up to 34.7%. This move consolidated the influence of the company's core long-term anchor shareholder, reinforcing that stable ownership structure that has really guided the company for generations.
Ah, interesting. So it shored up the family control?
Exactly. It suggests that capital allocation decisions are viewed through this multi-decade strategic lens, focused on stability and long-term value creation, which is a key qualitative factor supporting the investment case for many. What this means for you, as an investor, is a company committed to both robust growth and consistent shareholder value, guided by a very stable and demonstrably long-term vision. Hashtag recent challenges and developments, 2022-2024.
Even a giant of L'Oréal's stature needs to adapt constantly to a shifting global landscape. What notable internal changes or, say, leadership adaptations have they made recently to stay ahead of the curve?
Yeah, that's a good point. In late 2023, L'Oréal announced some significant executive changes, which became effective in the first quarter of 2024. And they were specifically designed to adapt its leadership structure to evolving market dynamics and future growth priorities. Fabrice Megarbain was appointed Chief Global Growth Officer. That's a newly created role, designed to accelerate growth across all zones with a more holistic vision. Vincent Boynet succeeded him as president of the critical North Asia zone, indicating, the importance of stable, experienced leadership there. But perhaps most notably, they created a brand new, highly strategic position, Deputy Chief Executive Officer in charge of divisions for L'Oréal China. They appointed Lawrence Ma to that role.
Deputy CEO just for China divisions.
Exactly. This strategic move was an explicit and very public acknowledgement of the increased complexity of the Chinese market. It signals a deliberate reinforcement of local leadership and strategic agility, specifically to navigate that challenging operating environment. This really underscores not just the importance, but also the difficulty of the China market right now and how seriously L'Oréal is taking it at the absolute highest levels.
Okay, so adapting leadership. What were the biggest storms L'Oréal weathered in the 2022-2024 period? And crucially, how did their resilience manifest in their response? How did they handle it?
Yeah, this raises an important question. How does a company of this sheer scale truly respond to macro-level challenges that affect entire regions or the global economy? They faced several significant headwinds, and their responses really demonstrate remarkable resilience and strategic agility. The primary headwind, no surprise, was the pronounced deceleration of the beauty market in China. This wasn't just a slight dip. We heard terms like a moribund residential property sector impacting consumer wealth and confidence. This led to a profound shift away from discretionary luxury spending. The slowdown impacted both domestic consumption and that historically lucrative travel retail channel, heavily dependent on Chinese tourists. As a result, as we noted, L'Oréal's sales in the North Asia zone contracted by negative 3.2% LFL in 2024.
So how did they respond to that China slowdown?
Well, their response has been multifaceted and quite aggressive, actually. Management emphasized that L'Oréal, despite the shrinking market, actually continued to gain market share in China. That demonstrates superior execution and the enduring desirability of their brands, which is incredibly impressive in that context. Looking ahead to 2025, they've set an ambitious target of 5% growth in China, and they're actively implementing something they call a beauty stimulus plan to support their brands locally, drive targeted innovation, and re-engage consumers. This shows they're not just retreating or waiting for a rebound, they're actively fighting for market share and investing in recovery, even in a really challenging environment.
Okay, China was the big one. What else? Inflation, supply chains.
Yes, exactly. Like all global consumer goods companies, L'Oréal faced significant inflationary pressures on input costs, raw materials, energy, transportation, you name it. But they demonstrated remarkable resilience in managing these headwinds. Their portfolio of strong, desirable, and often premium brands afforded them significant pricing power. They were able to judiciously pass on increased costs to consumers without materially impacting sales volume overall.
They could raise prices without losing customers.
Largely, yes. And this is clearly evidenced by their ability to protect and even expand profitability during that period, achieving that record 20.0% operating margin in 2024. In parallel, they've been continuously investing in their supply chain to enhance resilience and efficiency. Like that 2024 inauguration of the new Smart Fulfillment Center in Suzhou, China, designed specifically for e-commerce. This shows a very proactive and strategic approach to mitigating operational risks.
And any geopolitical stuff, currency issues.
Finally, yeah, as a truly global entity operating in over 150 countries, L'Oréal is inherently exposed to geopolitical risks and currency fluctuations. It just comes with the territory. The potential for new tariffs, particularly in key markets like the U.S., is a risk they actively monitor and factor into their planning. Their geographically diversified revenue base provides a kind of natural hedge against some currency volatility. Weakness in one currency might be offset by strength in another. However, significant and sustained movements in major currencies like the US dollar or the Chinese yuan can still impact their reported results, both positively and negatively. It's a constant, delicate balancing act they have to perform on the complex global stage.
Okay, given all this strength, this resilience, but also these significant challenges, particularly in China, how does the market currently value L'Oréal? What do the valuation numbers tell us about investor expectations right now?
Right. L'Oréal's stock consistently trades at a significant premium valuation compared to the broader market, compared to many of its diversified consumer staples peers. And this premium reflects its superior growth profile, its exceptional profitability, and its undisputed market leadership. As of late 2025, its forward price-to-earnings ratio, the PE ratio, is approximately 31 to 35 times expected earnings.
31 to 35 times, that's high.
That is high. Its forward enterprise value to EBITDA is around 20 to 22 times. And its forward enterprise value to sales, EV sales, is about 4.8 to 5.08 times. The forward dividend yield, while steady and growing, is relatively modest because the stock price is high, around 1.7% to 1.8%. What these numbers tell us, quite simply, is that the market has incredibly high expectations for L'Oréal's continued outperformance and robust long-term growth. When you see a forward PE hovering around 31-35x, that's the market saying, we expect L'Oréal's earnings to grow significantly and reliably well into the future. You compare that to maybe the S&P 500's typical historical average of, say, 20-22x, and you immediately understand the premium baked in. It's a clear bet on their continued outperformance, even factoring in all the challenges we've discussed.
That's a strong premium for sure, but how does that compare specifically to others in the beauty industry, especially those operating in similar luxury segments like Estée Lauder?
Yeah, a comparison with peers reveals a slightly more nuanced picture. L'Oréal's PE ratio is significantly higher than diversified consumer goods companies like Unilever or Kenvue, which frankly have lower growth profiles and more modest profitability. Interestingly, its PE is currently lower than its closest direct luxury peer, Estée Lauder. But this is largely due to a significant cyclical depression in Estée Lauder's earnings in recent years, particularly related to their own China and travel retail exposure. That has artificially inflated Estée Lauder's PE multiple, making it look perhaps more expensive than it might be on a normalized basis.
So Lauder's earnings dropped, making the PE look high.
Exactly. On an EV sales basis, which can sometimes be a more stable metric when earnings are volatile, L'Oréal's premium is even more pronounced, and that directly reflects its industry-leading profitability and its superior ability to convert revenue into robust cash flow. So this prompts the important question: what precisely justifies this consistent, significant premium valuation?
Yeah, why pay that much?
Well, this premium is supported by several fundamental factors we've thoroughly discussed throughout this deep dive. First, that truly superior and consistent financial profile, delivering higher revenue growth, that exceptional 20% operating margin, and stronger returns on invested capital than most peers. Second, its defensive qualities and inherent resilience, particularly that multipolar business model. It makes L'Oréal a quality compounder, a company that can reliably grow earnings over time, weathering market volatility far better than less diversified competitors. Third, its formidable and multifaceted competitive moat, built on unmatched R&D scale, an iconic and diversified brand portfolio, and that sophisticated global distribution network. These create high and sustainable barriers to entry for any aspiring newcomer. And finally, what you might call embedded growth optionality. The company has demonstrated a consistent ability to strategically pivot towards and then dominate high-growth categories like its current impressive success in dermocosmetics. And it still has significant runway for expansion in large, underpenetrated emerging markets.
So multiple reasons for the premium.
Multiple strong reasons. But the central question for investors and for you listening remains the sustainability of this valuation premium. As the overall beauty market's growth inevitably normalizes from its post-pandemic surge, and as the high growth engine of China decelerates to a more modest, perhaps mid-single-digit pace, the justification for these premium multiples will depend entirely on L'Oréal's ability to successfully execute its growth strategies in other regions and other categories to maintain its outperformance versus the broader market. It's a delicate tightrope walk, maintaining that growth premium. but it's one they've managed before with remarkable strategic agility. Hashtag key investment considerations. Strengths, risks, catalysts.
Okay, let's try and bring all of this intricate analysis together now. What are L'Oreal's undeniable strengths and perhaps biggest opportunities going forward, particularly in this evolving global landscape?
Right, summarizing the strengths. L'Oreal's primary strengths really lie in those formidable and exceptionally difficult to replicate competitive advantages. Its unparalleled scale funding, that industry-leading R&D budget of over $1 billion annually, a vast and diverse portfolio of over 36 iconic global brands catering to virtually every consumer segment, its sophisticated universalization strategy, enabling global scale with crucial local relevance, and an extensive worldwide manufacturing and distribution network ensuring both efficiency and agility. Add to that its resilient multipolar business model, which allows it to actively pivot resources towards the strongest growth areas. We saw that powerfully demonstrated by the outperformance of dermatological beauty in emerging markets, successfully offsetting the North Asia slowdown. And finally, its superior financial profile, consistent mid to high single-digit growth historically, that remarkable 20% operating margin, robust free cash flow, all supporting continuous reinvestment and reliable shareholder returns.
And the biggest opportunities.
The most significant opportunities for L'Oréal and for you to watch really lie in the continued global expansion of that high-margin dermatological beauty division, fully capitalizing on the healthification trend, and the substantial runway for growth in large, underpenetrated emerging markets, particularly SAPMENA and Latin America, where their universalization playbook can truly shine and help them capture those next billion consumers.
Okay, clear strengths, clear opportunities. But no company, no matter how strong, is without its challenges, its vulnerabilities. What are the absolute key risks for L'Oréal that could potentially derail some of this impressive momentum?
Yeah, connecting this to the bigger picture, the biggest near-term risk remains their dependence on the Chinese market. No getting around that. The L'Oréal Luxe division, which is a critical contributor to group profitability, remains heavily exposed to consumer demand in mainland China and that associated travel retail channel. A prolonged or maybe even structural economic slowdown there, especially given those macroeconomic pressures like the property sector issues and low consumer confidence, could significantly impact overall growth and profitability, maybe beyond current expectations.
So China exposure is number one risk.
It has to be. And there's valuation risk. Their stock trades at a significant premium, as we discussed. That implies incredibly high expectations already priced in. Any significant execution missteps, or maybe a failure to meet those lofty growth targets, could lead to multiple compression, where the market simply reevaluates its worth downwards, causing the stock price to fall, even if earnings hold up okay. The beauty industry is also intensely competitive. There's a constant threat of disruption from agile, independent, and direct-to-consumer brands. This requires L'Oréal to remain hyper-vigilant and relentlessly innovative just to defend its substantial market share. And finally, as a truly global company, they're inherently exposed to geopolitical and broader macroeconomic risks. Adverse currency fluctuations, potential tariffs from trade disputes, shifts in consumer discretionary spending if global economies falter more broadly, these are always present.
Right. Strengths, opportunities, risks. So if we're tracking L'Oréal's journey going forward, what are the critical catalysts and milestones we should be keeping an eye on? What tells us if they're successfully navigating these challenges and seizing those opportunities?
There are some clear catalysts and milestones that will signal their ongoing success, or lack thereof. A significant positive catalyst would be any definitive data or policy announcements coming out of Beijing that successfully stimulate domestic consumption and improve consumer confidence. That would be a big boost, especially for the high-margin Luxe division. Continued double-digit growth and maybe even margin expansion in the dermatological beauty division will be a key indicator of their diversification strategy success. Is it truly offsetting weakness elsewhere? Sustained, strong double-digit growth in those ATMENA and Latin America regions will be crucial. It validates the thesis that these markets can effectively offset moderation in China, demonstrating the true power of their multipolar strategy in action.
And innovation, new products.
Exactly. Finally, the successful market launch and, importantly, the rapid consumer adoption of key innovations will be crucial milestones. Think new products coming from their green sciences platform, hitting those sustainability notes. Or transformative new services powered by beauty tech, like that L'Oréal Cell bioprint device. Does it gain traction? Watching these things will be important as they position themselves as a leader in the future of beauty, not just the present.
For you listening, these are really the signposts that tell the ongoing, evolving story of L'Oreal's future trajectory. Hashtag outtag outro.
So what does this all mean then? We've taken a truly deep dive into L'Oréal, the undisputed global beauty leader. We've seen a company fortified by a multipolar business model that intelligently distributes risk, an unparalleled R&D engine that seems to genuinely shape the future of beauty, and a genius universalization strategy that blends global scale with crucial local nuance. Yet even this powerhouse is grappling with a dramatically shifting landscape, particularly that pronounced slowdown in China. While simultaneously unlocking immense potential in dermocosmetics in those rapidly expanding emerging markets, it's a story of incredible scale, yes, but also strategic foresight and a relentless, almost fierce pursuit of innovation.
Indeed. L'Oreal's journey really underscores a fundamental truth. Even the most dominant players must continuously adapt, innovate, and strategically allocate capital just to maintain their edge, let alone extend it. Their ability to simultaneously address significant headwinds in mature markets while aggressively pursuing new growth avenues, well, it's a masterclass in corporate resilience and strategic agility. The premium valuation they command clearly reflects this track record and future potential, but its sustainability, as we said, truly hinges on their ongoing, disciplined execution in these critical areas: China, dermocosmetics, emerging markets, innovation. It's really testament to the power of a well-crafted strategy that blends global ambition with local nuance, ensuring they remain relevant, profitable, and pioneering in an ever-changing world.
And for you, the learner, it leaves us with perhaps a provocative thought to mull over. In a world where beauty is increasingly intertwined with health, technology, and sustainability, how might L'Oreal's beauty tech powerhouse vision, exemplified by things like personalized skin analysis devices and AI-powered customized formulations, fundamentally reshape not just the products we use, but maybe our very understanding of what beauty even means in the coming decade? Will it become less about masking flaws and more about optimizing our biological selves? Something to think about until our next deep dive.